Hey, what's up, my friends? Jason Woodland here, back again with Always the Journey TV. We're representing here number 45, episode number 45. So we're moving right along. We're out here interviewing all kinds of fun people in the community regarding their businesses, their jobs, their artwork, their side hustles, their event space, and so forth. It's all about trying to network people into different networks so people can utilize resources and products and services out there. So anyway, today's small business shout out goes to Public Coffee and Maza Restaurant, two wonderful local businesses. Be sure to check them out. And then, so today we get the pleasure of interviewing my dear friend, Rebecca Yates. She is a published author, licensed insurance broker, consultant, and owner of Ark Insurance Solutions, LLC. She has been working in the health insurance industry since 2004. Before starting Ark in 2010, Rebecca worked for a diverse range of fields, including insurance, aerospace, emergency medical suppliers, and information technology. She received a Bachelor of Arts degree from Westminster College and was recently released from serving on their Alumni Board. She recently also served as the vice president of Utah Independent Business Coalition, formerly known as Vest Pocket, and volunteers with Big Brothers Big Sisters and Westminster College as a mentor. She has been active in a working group for Healthcare.gov since 2017 and was asked to serve on President Trump's task force on medical cost transparency. So we're going to learn a lot about what she does for her business and some of the things that she does on a national scale. So ladies and gentlemen, please allow me to introduce Rebecca Yates.
Hello.
What's happening?
It's a good, beautiful, sunny day, and I'm already wearing sandals because I'm in denial. I want summer to start now.
I 100% agree. And I'm excited because we attempted to do this last time, and halfway through we got cut off because Holiday and Conwood Heights decided to go without internet for about 6 hours. And awesome that you're rocking yellow because we've got spring fever in the house.
Oh yeah,
I love it. And then of course, I got to represent a little bit of that St. Patrick's Day. But mostly it's to do with spring. I wanted to have that color like you were rocking too. So.
Well, and besides, I couldn't wear green, then we'd match.
Well, and it's funny because when we bought this house, this room was green. It's fine, but I just haven't had the chance to paint it yet. And I've been talking about that on a few episodes. So anyway, I'm going to be painting this room. So then if I wear green, I don't disappear into the homemade green screen.
Yeah, I was going to say, you got your own green screen. You could do all kinds of fun stuff with that.
Awesome. So I'm glad you're here with us today on Always the Journey TV. I want to get my listeners to really understand more about what your business is. And I want to first ask, what initially inspired you to do what you do for your business?
Kind of a long story, so roll with me for a second. But when I was in my 20s, I was going through divorce, and I'd pretty much lost everything. Short sold the house, all that good stuff that happens in a divorce. And I had taken my husband, or soon to be ex-husband, off my health insurance, but we weren't legally divorced yet. We were still working through the process. And my mother-in-law called me on the 3rd of July and said, I don't know if I should call you or not, but he might die, so you should come to the hospital and bring your daughter. That was the entire conversation. Wow. So I threw our daughter into the car and drove to the hospital, and he had rolled his four-wheeler and had to be life flighted and was in the ICU. And as I was standing there, of course, just in complete shock with my daughter, the nurse pulled me aside and she said, so you're the wife, right? And I said, well, only technically. I mean, we've been separated for like 2 years. And she goes, yeah, well, welcome to Utah. Everything's common law, common ownership. So you're married. He doesn't really have a job because he was working for his dad. He just told us he doesn't have health insurance. How do you want to pay for this? We're at about $100,000 so far today. It's probably going to be around $1 million. Like,
whoa.
How do you want to pay for it? Looked at me straight face, like, credit card or check?
Seriously?
Yeah. I was like, hi, single parent who just lost her job because unknown to me, there's a little law in Utah that says that anyone can block you from moving out of the state with your child if they can prove that it's in the child's best interest. So I'd been offered, the company I was working for offered me a transfer to another state because they were shutting our location down, and my ex blocked me from leaving. So it was a little tricky because I found myself looking for work, and I had been offered this job with this health insurance broker. And I had previously been selling emergency medical supplies. So every time I made a sale, I knew they were going to use that to save someone's life.
Wow.
I mean, you think about how fulfilling that is. Like, hey, I just sold you a tracheotomy kit and you're going to use it to literally save someone who is dying. It was very fulfilling work and I really enjoyed it. And then when I was offered this position for the health insurance broker, I was like, insurance people have no morals. That's not for me. I need to sell something I really believe in. And of course, in your 20s, you don't really understand how important health insurance is. And for a hot second, I had worked for an auto insurance guy in college, and he really had some questionable morals, and that was the only exposure I'd had.
Wow.
So I was waiting, and I had this offer, and I thought, I'm going to decline this because I need to do something that I can really have my heart in and be passionate about and take care of people with. And I didn't think insurance was that. So when my ex-husband rolled his four-wheeler and the nurse asked me how I was going to pay for it, my wonderful father-in-law said, let me see what I can do. And he called his health insurance broker. And they had been given a quote for a plan that was supposed to start July 1st. He couldn't afford it inside of his business. The rates were too high. It was before healthcare reform had gone through, and they'd gotten the max rate up, and they just literally could not afford it. He's like, I could pay payroll or I could pay the health insurance, but I couldn't do both. So he had declined the quote. When he called his broker, the broker said, hey, you have a valid quote until the 6th of July. If you accept the quote and pay the premium, we'll cover the cost of the accident. And Regents Blue Cross Blue Shield picked up the bill. And suddenly I was like, wait a second, that saved me from bankruptcy. Like it was the last straw kind of scenario. And I suddenly went, I actually believe in health insurance now. Weird. And wow. So I took the job in the health insurance brokerage. My poor father-in-law ended up letting his business go because he didn't feel right about taking and paying the premiums and then canceling the plan. So he's just a wonderful human. And that's how I got started in it. And then the more I worked in it, the more I saw how much it impacted people's lives. Like we had someone that in our family got cancer, but because he didn't have insurance, none of the doctors would treat him, because he didn't have a way to pay for it. And people don't always understand how much it impacts their ability to get care. Because while they're guaranteed care in the emergency room until they're stabilized, they aren't guaranteed treatment. They aren't guaranteed medications, none of that. They have to be able to prove that they can pay for it. And so the longer I've done it, the more passionate I've gotten about it, the more I've seen it impact people's lives. So.
Wow, that is amazing. And you started your business, Ark Insurance, in 2010. Is that correct?
Yeah. Well, fall of 2009, but yeah.
Okay. So obviously you've got some real passion for it. You've been doing it for quite some time.
Just a minute.
All right, cool. So tell us a little bit more specifically about the business. Okay, so health insurance. So can you tell us a little bit more about what open enrollment looks like and sort of small business insurance and that kind of stuff? Just sort of expand on that.
Jason, I'm actually really excited that your power went out because all the laws have changed since your power came back on.
Well, that was a week ago.
I know. Things
change quick.
That's what happens when I go on vacation. Everything has actually literally changed Friday. All the laws changed. Everything changed Friday. So this is great timing. Let me back up a little and explain what we do. So we are health insurance brokers. We represent all of the carriers in the state of Utah. So when you see a select health plan, we can sell you a select health plan. What's a little unique about what we do is there are no fees to use our services. So if somebody buys health insurance from Select Health, they're paying to have a broker. But 45% of people in Utah that buy insurance are not using a broker, even though it's free to them, right? Because they just don't know we're here. There aren't as many of us as I would like to see. So we are a free service to help consumers get the right kind of care. What we do that's a little different in our in our agency is rather than saying we're only going to work with groups or we're only going to work with individuals, we specialize in both. And our book of business is made up almost 50-50 of businesses and individuals. And what that means is we can sit down with somebody and really analyze which path is better, because there are advantages to each path, but it is set up based on that person's needs, right? So somebody who's self-employed, previously they couldn't get a subsidy if they made more than 400% of the federal poverty level. If you're not getting a subsidy, individual policies are more expensive and have less benefits than group policies. And we can write a group policy with just 2 people, and they can be a husband and wife, right? So we have the ability to really look at each individual situation and make the right choice for that person and help them get the right kind of coverage and make sure that they've covered everything they need. Now, what changed Friday, which is totally wild, in the past, if you wanted to buy an individual policy, you could only buy it between November 1st and December 15th, okay? This year, President Biden allowed an open enrollment, well, they're calling it a special enrollment event due to COVID, from February 15th to May 15th. So for the first time ever, we've got this, hey, we're going to do this in the spring and anyone can buy insurance for any reason or make changes, right? So that happened in February. What happened on Friday was they passed the new COVID relief bill. And what that did was it actually allows for the federal government to pay certain COBRA premiums. So people that got laid off and had COBRA offered to them could potentially get it covered 100%. It also changed all of the premium ratios. So where before, if you were getting a silver plan and you made 300% of the federal poverty level, you had to pay 3% of your annual income as the premium. Well, they've dropped it to 0. 0. Yeah.
Wow.
So people that make under a certain limit are now going to be able to buy silver plans for free. Now, we've seen people be able to buy bronze plans for free if they really made very little, like right above the Medicaid line. This expands it. And so now people that are in a bronze plan could be able to upgrade to a silver plan for free. And silver plans are much better. They have lower deductibles. They have out-of-pocket maximums that are lower. They have co-pays. Like, that's a much better plan. And then the other thing that is major for people like us that are self-employed, they've taken the cap off. So no more is there, hey, you made $52,000, so now you have to pay back your subsidy. Now it is, oh, you made $52,000, so the most you can pay for your premium is 8.5% of your income, period.
Interesting.
Right? So as your income continues to go up, yeah, you may have to pay back some of it, but there's not a cliff. There used to be a cliff, a very drastic cliff. Like you went over by $5, you lost, you had to pay back $28,000 kind of cliff. This has removed the cliff completely. And now it says that they cannot pay more than 8.5% of their income. So for those of you that are watching, sit down, calculate what 8.5% of your income is and see if your premiums are lower than that. Because if they're not, then you need to get signed up by starting April 1st. We'll be able to run those numbers and put people in. We're still waiting for them to clarify, and I have a meeting with CMS tomorrow to see if they're going to update people's subsidies automatically or if we have to manually update them. Initially, they were saying we had to manually update them. Yesterday, they released something that said, we're working on a solution where it will automatically update. But if you don't update it, what'll happen is when you file your taxes, you'll just get a bigger refund.
Okay.
You're going to take advantage of the better plan if you were to move from bronze to silver. So yeah, it's changed.
Yeah, quite a bit.
So
yeah, exactly. So as far as this second open enrollment, it is going to, what you said, what, April 15th?
It goes till May 15th.
May 15th. Okay.
New rates are supposed to be released April 1st. So we will have 45 days because for some reason they really like 45 days to do all the things.
Okay, interesting. So from your perspective, what are the, because there's always going to be pluses and minuses to everything. Do you see what the pros and cons to some of these changes that took place Friday are? Or are they yet to be seen at this point?
There's definitely pros for the consumer because we're going to be able to get people insurance and have it be less expensive. So over all of Healthcare.gov, the average cost of a plan right now for people enrolled is $50 a month. And I know that most consumers don't recognize that. CMS just released that data 3 weeks ago. Prior to that, we didn't have that information. But yeah, the average person pays $50 a month, which means if they're going to lower that down to, zero, that's pretty amazing. I mean, when can you go out and buy health insurance for free? Questions I have that I don't think are resolved yet are, how are we going to pay for that?
Yeah.
Of course, there's always that back end of, money is not magic. It's math. Just like insurance is not magic, it's also math. How does that all get offset? And we don't know that yet. I mean, the Congressional Budget Office is estimating that the average consumer between the ages of 55 and 64 is going to have their premium reduced 61%. Right? So that's awesome for the consumer. Where are we getting those funds?
Right. That's always got to be the question.
And it's not that they're giving it to the insurance company and asking the insurance company to eat it. What they're doing is the federal government is paying those funds to the insurance company. So the funds are coming from the federal government, and whether it's in cash to the carrier or it's in the form of tax credits, it is revenue from the federal government that is being utilized. So I don't know how that's going to work. But for the most part, I think on the end of the consumers, people are going to benefit from it.
Okay, interesting. Well, thanks very much for sharing all those details. Can you clarify one other thing? You said for the person that can sort of upgrade, you were talking about on the X percentage above poverty. Can you give a more definitive sort of, I was going to say revenue number, but threshold of income that qualifies to sort of shift from that one package to the next higher one?
Well, I'd love to, but it is based on family size. So it's kind of a moving chart based on how big your family is. A single person, it was 51,000 was the cap previously, between 48 and 51,000. And so the shifting is based on all of those qualifiers, right? So I'd have people that had 9 kids that made $170,000 a year, but because they had 9 kids, they got a really hefty subsidy. And that's going to continue to be the case. As far as the new tables go, between 100% and 200% of the federal poverty level, 100% to 150% of the federal poverty level, it's free insurance. Now, whether it goes to the state, which in our situation it would at up to 138% of the federal poverty level, or it's handled by the federal government, is determined based on the income. If you are at between 150% to 200%, you pay between 0 and 2%. If you go from 200% to 250, it's 2 to 4. So it kind of follows that same pattern until you get to the 400%. And then at the 400% and above, it's 8.5%. So to give you an idea on that federal poverty level, I'm trying to remember, I have a little chart that I don't have within reaching distance. Hold on one second.
Right.
I have it.
Yeah.
I got it right here. It's right here. It's not right.
All right, cool. I figure giving as much information to our viewers as possible is always a good thing.
Yes. And last time I had this right here all ready to go. And then this time I was unprepared. So I'm going to flash it to you, but it is a complex chart. So when I tell you, it's not as simple. But the federal, so let's say a family of 4, because I know that's really common in Utah. That 400% cliff was 104,800.
Okay.
So anybody who made more than that wasn't getting any kind of assistance. Well, now they can. And it, of course, will depend on what your premiums are, right? Because
so is that on an individual basis or household income?
It's household income. It's your adjusted gross income, which is a big deal for people that are self-employed.
Yep.
Right? Because we get to write all kinds of stuff off. And also, I mean, one of the things we always used to tell people too is like, if you're bumping up against that cliff, then throw the difference in an IRA.
Yeah.
Because it's deductible and it lowers your AGI. So self-employed people have a lot more flexibility inside of the structure.
Yeah, exactly. Okay, good. Yeah, that definitely helps on the definition a little bit further. Is there anything else you'd like to share regarding those definitions or those numbers?
Well, I mean, just for fun, for a family of 10, because we talked about those families that have 8 and 9 kids.
Sure.
The 400% cliff was 212,000 prior. And so often I would have people be like, well, I make $100,000 a year. I can't get a subsidy. And it's like, well, how many kids do you have? So there's this misconception about how much people can qualify for. And now that that cap is gone, it's like everyone that makes decent money and isn't getting a subsidy needs to check.
Yeah, exactly. That's a very, very important factor there.
Yeah.
And then also maybe a little bit more clarification regarding businesses and business health insurance. Obviously, it can be 2 or more. Mm-hmm. Are there any requirements for types of businesses, or are there any exclusions for types of businesses?
So there was when I started doing health insurance, but there's not anymore. They're required to take every industry. They can't charge based on industry. So there's only a couple of things they can charge on now. It's location, your ages, right? They can charge based on if you smoke or don't smoke. Mm-hmm. And yeah, it's very simple. It used to be, remember we used to fill out 40-page papers and you had to like disclose everything in your life that you've ever done, and then they would accept or deny you. It's all guaranteed issue now in small group. Now, large employer is a different game. And Utah classifies large as 50 or more.
Okay.
So anyone that has more than 50 employees, it's a completely different animal. That's a whole nother podcast all by itself, and it's super fun. But small businesses, it's very cut and dry. Like if your business is in the same rating area, there's only 6. So if you're in Salt Lake County and you start your plan the same month as another business, you all get the same rates.
Oh, okay. Interesting.
Right? See, and it used to be that you could do it based on how big the group was. Like the bigger the group was, you got a discount. Mm-hmm. And none of that works anymore. The other thing that's different now is that it's based on a per person cost. So instead of being like, oh, single 2-party family, it's, well, yes, you're single, here's your age and your rate. And then you add your wife. Well, no longer do they assume your wife is the same age. Now they do it based on her age and her rate, and then just add the 2 rates together, right? And that's the case for kids too. Now, kids are capped at 3 if they're under 19. But when you've got, like I have a 20-year-old, I have to pay for that 20-year-old, whether I have 7 other kids or not, because she's now an adult and therefore she has her own rate. So for these families that have got 6 and 8 kids, and they maybe had 6 that were under 19, and now those kids are starting to crest over 19, it's probably cheaper for the kid to get on their own plan.
Oh, interesting. Okay.
And if they're not being claimed on their parents' taxes, which I can't provide tax advice, but if they don't claim the kid, now it's based on the kid's income alone. 20-year-olds don't usually make that much money.
Right. Okay, and that's why it would be cheaper.
They could potentially get a better subsidy, even qualify for what they call cost share reductions, where they take people that are in a certain income level and they actually can give them a plan that has like no deductible, $1,000 out of pocket maximum, and $5 copays. Okay,
interesting. And you did specify something about how geographic location can be judged in on that premium. Yeah. Is it by zip code? Is it by county, state? What does that look like?
Well, so there's 6 geographic rating areas in Utah. Salt Lake County is its own rating area. Utah County is its own rating area, probably because they have the most births. They get charged more. And then they kind of lump together the outlying spaces into smaller, so they'll take Juab County and pair it with the next neighboring county. So it's set up on those 6 rating areas.
Interesting. Are more populous areas more expensive technically, or is it the least populated areas, or does it base on that? Because I know car insurance is based on, one of the things is based on population.
It really depends on each area, right? So the areas that have a lot of mining work, I've seen them be a little more expensive.
That makes sense.
Because that demographic, they tend not to get any kind of care until a finger's falling off. And so things get neglected until it's a crisis, right? So it depends on the area.
Okay. That's interesting stuff. Okay, cool. So speaking of geographic locations, what geographic locations does your business cover?
We are licensed in 11 states. We do mostly Utah, but it's very easy for us to do Idaho and Nevada as well. We will work in other states that we're licensed in, but not if it's just for an individual, for example, because we have to go to carriers and make commitments and do all that kind of stuff. But if it's for a business, it's much easier for us to cross those state lines.
Okay, interesting, cool. So tell us a little bit more about what your perfect client looks like. So who makes a good referral for you? So someone watching this video, for them to say, hey, you know what, Rebecca and her team are my people. What does that look like?
I really love working with entrepreneurs. I understand them. I speak that language. They tend to be really passionate people, and I like working with people that have a very strong passion. But also, the people that I work with usually are looking out for their employees. Like, they have a deep love for the people that work with them, and they want to look out for them, and will do what's in their best interest. But also, I really enjoy working with people that are innovative and responsible and communicative. So it's much better for us if we can work with somebody who lets us know if something changes.
Mm-hmm.
Right? Where we struggle are the people that go completely silent and then say, well, my insurance got canceled 4 months ago. Why can't you fix it? Because I can't.
Yeah.
I can't fix that.
Exactly.
Can't do anything about it. We like to work with people that partner with us, that look at us as a partnership and making sure that they can access their help.
Nice. Okay, I like that. Tell me a little bit more. I mean, just to sort of revert back to your intro, I was just thinking about it. So you were on the task force on medical cost transparency. Can you tell us just a little bit more about what that means and what that would ultimately do?
Well, so the goal was to lower the cost of medical care because, as you probably know, health insurance is capped on their profit margin. They're required by law to cut consumers a check if they have too high of a profit margin. Those caps are 15 to 20%. But when you're navigating healthcare, what you have to look at is the cost of the care. So the hospitals don't have any such cap. They can raise their prices anytime they want to. And all the insurance company can do is go, oh, sorry, we raised the rates. And then they take the guff from the American people because that's the front-facing piece.
Yeah.
Right? So the idea behind the medical cost transparency was that we were going to be able to go in and start disclosing how much things cost before consumers actually consumed them. Right? Every other industry, that's how it works. You're going to go buy a car. The first thing you say is, how much is it? When you have to have knee surgery, you don't walk in and go, how much is it? Because they can't tell you. Right? Even if you ask the question, they're like, well, I don't know, we've got 1,800 different contracts. Which contract are you on? Which, it has to go through all these layers. And half the time when they give you a quote, it's not accurate because they had to put in 4 extra stitches. So now you've got another $2,000 bill. So the idea behind the medical cost transparency was a baby step, really, to getting to where we can start to control the actual cost of care instead of the cost of the insurance of the care.
Exactly.
Right? So I was invited to participate on that panel. I was asked to, and it's all volunteer. All the work that I do with the federal government, every time I show up and work with them on a panel or give input, it's all volunteer. I have to pay for my flights and my accommodation and everything. So as part of this, they were like, you have to be ready to jump on a plane at any time. When we call this meeting, you just have to drop it and go. And so I made all these commitments. I was ready and I'm waiting. And then I opened CNN one day and it says, Trump announced the results of the task force. And I was like, what?
I'm on that task force, but I wasn't there.
And so I'm reaching out to my contacts up there, like, did I miss an email? Was there a meeting called and I missed it? Like, did you guys go to my junk? Like, what happened? And he said, nope. Nope.
So what were the results?
Whatever Trump wanted them to be. It was basically like, we're going to do this. But yeah, he never actually called the task force to a meeting.
Okay. Interesting.
Yeah,
Well, thank you for your duty of attempting to be on that advisory committee, because that is wildly important.
I was really torn about it because obviously I'm a single parent, right? And leaving my kids and traveling for those types of things is really difficult on my family. And I have a daughter that's got some special needs, so it's even more difficult. But I just really felt like we needed to get that information up there, and we needed people that are in the industry talking on behalf of the American people. And so that's why I spend so much time with them. I mean, I meet with them again tomorrow. I spent all 2 weekends ago testing the new systems that they're implementing. Like, we do spend a lot of time trying to improve this system. And since they started having us on this listening group, we've seen a lot of improvements in the processes and the changes. And in fact, we sent up some suggested sample language for some legislative changes we want to see. We're trying to fix the family loophole.
Mm-hmm.
I don't know if you've run into that one yet, but where people that have a person in the family that's working and gets offered an affordable plan, well, it's affordable for the employee, but it's not affordable for the kids or the wife. And the way the legislation is currently written, there's no help for the kids and the wife. So then I have to go back to the employer and try and convince them to not allow kids and wives on their plans so that the kids and wives can not be eligible and go get a subsidy. And so we're trying to fix these types of things.
Yeah.
And the people that administer all of this beyond the political, because now we've been through several administrations, right? What's been really good for me is seeing that the people at the level that are actually implementing these things, what they care about is taking care of the American people. Like, it really restored my faith in government, being able to get up there and have lunches with these people and talk to the developers and watch them take the feedback that we give and implement it and make changes and improve things. Right?
Yes. Well, and the catch is, and of course, this is definitely a conversation for a different time, but there are so many moving parts for affordable healthcare and insurance costs and these types of things.
Yeah.
I mean, literally, I mean, there's 1,000 things that are happening, and I mean, that's just the tip of the iceberg to even talk about that kind of stuff.
Yeah. Well, and what I keep screaming about, and every time we just had a meeting with Senator Lee's office again, and I was like, listen, if you can put a profit margin cap on the insurance companies, then you can put one on the hospitals and the pharmaceutical companies. Do it.
Right.
Like, you can't cap one part of the supply chain and think it's going to fix it. It won't.
No, it's that major problems if you're capping one side and not another.
Then the free market can't work at all. So, and that's the thing that we always navigate is, like, we're here to help people navigate the system we have. And when the system changes, then we make changes, but we're always fighting to improve the system too, right? So it's not, sometimes people have this perception of insurance brokers, they're just out there to get the money, and that's not actually how most insurance brokers that I know work. It's like, we are navigating a system that is not working optimally.
Right.
But we're doing our best to make it the best for the consumers within the system.
Nice. Well, I definitely appreciate all the work you do. As you know, I'm health licensed, but I don't really do the health side of things within my practice. And so I highly respect all the things that you guys do to navigate those laws that change dramatically more than anything in my business. Well, in what I specialize in anyway. So, I mean, yeah, like I said, we attempted this a week ago, and then all of a sudden there's all these changes that come down the chute on Friday. So,
surprise. It wasn't a surprise to me because I knew it was coming, but for most people it was a surprise. Yeah,
I bet. So tell us a little bit more about how someone would get a hold of you.
We actually have quite a few different ways to get a hold of us. So we have a website. It's ARK Utah. So Ark Utah spelled out, ARKutah.com. We have the ability to schedule directly with an agent right there. So if you're like me, I'm the type of person that's like, let me online schedule. I will get it on my calendar and then make it happen. That's the best place to do that. You can call our office, 801-901-7800 or 7803. Those both work. And we'll get you on the calendar. And then there's my email, Rebecca@ark-ins.com. And we're going to be very busy for the next little while. So get on our schedules sooner rather than later. Because if we have to manually update everybody's application, it's going to be a wild 45 days.
That's right, because you still don't know yet if you're going to have to do that or not, huh?
Yep. We still don't know.
So, I mean, what does that look like from a time perspective if you have to do everything manually? Is that going to be 10 hours a day of just manual, like?
Oh, 10 would be light. So to give you perspective, we do 90% of our business in 45 days.
Yep.
Every single year. And then it compounds, right? And there's a certain percentage of our book that we talk to every year. There's a certain percentage of our book that we only hear from when something major happens. So while we're doing our renewals, we renew 46% of our group, our businesses every year on the individual side. Sorry, not business, but individual. We touch that many. Well, so this year we're going to accumulate how many years? 11 years of business and have to touch all of it and do it in 45 days. When we're usually working absolutely insane hours anyway.
Yeah.
Now we're going to compound it. Plus, there's going to be a large influx of new consumers because obviously now it's much more affordable. And we want to get the new consumers on. I mean, there's 23 million uninsured Americans, and we are pushing so hard to help these people understand what kind of access they have. Because why wouldn't you sign up for free insurance?
Mm-hmm.
I mean, you can blow through. My family last year went through $160,000 in medical expenses, and we didn't have anything catastrophic happen.
160 grand in 1 year.
And we've hit our out-of-pocket maximum in February this year. We blew through our $9,000 out-of-pocket in February. We're going to be free for the rest of the year, but we'll hit another 160 probably this year. Part of that's medications, some of it's treatments for my daughter. But you have one catastrophic thing happen. My friend was not insured, and her husband had a heart attack, and it was $65,000.
My God.
And people don't understand the cost of care. So when I talk about my husband rolling his four-wheeler and it being $1 million, that was in 2004.
Wow.
So it would be significantly more expensive now. And that's one of the things when I talk to consumers that have been very fortunate, had really good health, when they do get one of these big bills, they're just blown away by how much it can cost. I mean, you can have a broken arm and have it be $1,500.
Yeah, exactly.
The average consumer doesn't understand that if they've been fortunate enough not to have an issue. So when I'm really on a mission right now to get as many people insured as we can, especially people that have been going without insurance, because one, it gives them access to care.
Mm-hmm.
If you get cancer and you don't have insurance, sorry, they aren't required to treat you. And if you don't sign up now, you can't sign up till next January. So like if you can get free insurance, which you possibly can right now, get it because it's free.
Yeah, exactly. So 45 days, you do 90% of your business, and then the rest of the year you focus both on small businesses, because you can sign up a small business anytime during the year, correct? And then also you focus on vacations.
Well, we do large businesses too. But hey, listen, when you do 90% of your business in 45 days, I feel like you're on vacation.
I'm not messing with you, I promise.
I feel like vacation is an essential part of my children's education.
Absolutely. I love that. I think that's great because, I mean, there's no better way to learn than to do.
Yep.
Or
I help them see other ways of living and other lifestyles, and recognizing that, our way isn't always the only way. In fact, it's never the only way. And so being able to give them mind-opening experiences, I think, gives them an advantage.
I love that. That's awesome. So as we move to a wrap up, before I ask my final question, is there anything else that we may have missed that's really important for my viewers to understand about the health insurance arena, changes, or anything that you think would be interesting to know further about your business?
Well, I think the number one thing we have to remind everyone is you have a very limited window right now to take advantage of this, and it could be free. So go get health insurance right now, right now. And if you have checked before and it was too expensive, that may not be the case anymore because of the changes that were made on Friday. I think it's important for people to kind of get those assumptions out of their head. I talked to someone yesterday who's like, oh, I just know I can't afford a group plan, and I ran the numbers and it was less than he was paying. And he was like, what? And it happens. And we'll see a lot of plans out there that aren't real health insurance. A lot of scams. There's a ridiculous amount of scams. They'll go out there, oh, it's so much cheaper. We saw one yesterday that came through and it said it was cheaper, but it was $200 more a month than full insurance. So be really cautious of the narratives that are out running around in the media and check, because that may not be real.
Interesting. That's actually a really good point. And of course, I won't have you say any names of any companies by any stretch, but there seems to be a handful of really some places are maybe even established that do health insurance, but might not be technically health insurance, right? It might be sort of a hybrid of such, and it may cover certain things.
Yeah.
You know what it almost reminds me of? Because when I do reviews for life insurance for people, I see a lot of people that have accidental death and dismemberment policies, and they think it's actually full-blown life insurance when that is not the case. Mm-hmm. And it sort of reminds me of what happens in the health insurance arena. Am I making a proper sort of connection on that?
You are, absolutely. And the one that we saw yesterday, and it's very common in these types of plans, they'll have a lot of like fluffy upfront coverage. Oh, teledocs for free, and you get office visit copays. But then when you actually get into their exclusions, no organ transplants, no, and it starts listing all the really expensive stuff. So my philosophy on insurance is your insurance is here to keep you from bankruptcy, right? Paying for an occasional doctor's visit, probably not that big of a deal in the long term, but getting a $100,000 bill is a huge deal, right? Paying a $200 bill is manageable, even if you have to do payments. Like there's usually a way to pull off a $200 bill. So these types of plans will often fluff up this whole, we've got this really inexpensive upfront coverage, but they leave you completely exposed in the back, right? And like I said, the one yesterday was more expensive than a fully covered plan. And so I want consumers to be critical and really look at these things. And the best case scenario is to have someone like me look it over. Because I'll tell you, if you get one that's decent, I have told people, like, this one looks like a decent plan. These are the things I can see. These are the concerns I have. But I will tell people, hey, this thing you're looking at, these are the holes. These are the problems. But we had a family that they were on a plan like this. And they said, well, it was, $450 a month for their whole family. So they're like, it's a great deal. This is the greatest. And they had a daughter that got cancer. And it just happened to be during open enrollment. Thank heavens. Because when people don't realize this, when they're enrolled in a plan like that, it's not real insurance. So if they cancel it mid-year, they do not get to come on to real insurance mid-year. It does not count. Whereas if they were on an insurance policy through work and lost their job, they would open a special enrollment. Well, this family, we got them enrolled. Their premium on a fully insured product was $16 a month for the whole family. Okay. And when they got diagnosed, so they've got this 20-year-old daughter, 22, who gets diagnosed with this really rare type of cancer. And the doctor pulls the mom aside and says, you don't have insurance. It's only going to cover $100,000. That's not even the first treatment. You need to transfer your house to a trust in one of your minor children's name because you're going to lose everything. This is what the doctor tells her. So she has to hear that she has a child with cancer, and then she also has to hear she's going to be financially ruined, right? We happen to have a mutual friend who connected us. We went through all of it, got them enrolled in a plan that was $16. It was an HSA style plan, and their out-of-pocket maximum was $6,900. So the difference in premium from the $450 they were paying from their cheap insurance, they put in the HSA and ended up almost completely flat. So they basically had to pay like $2,000 for their daughter's cancer treatment instead of losing their house. And those are the types of things that I see all the time. It makes me absolutely insane.
Wow. Yeah, I mean, that just leaves you speechless, and being that both of us are part of the insurance industry, we see a lot of that kind of stuff where there's just a lot of risk exposed in certain aspects of people's lives. And it's imperative for people to really understand exactly where they're at and where those exposures lie. So
if you're not getting a plan in Utah, if you have an individual policy and it's not through like Select Health, Regents, Molina, the big Cigna, the big ones. Now, be careful with Cigna because sometimes these other companies they'll use the Cigna network and they'll put the Cigna logo on it, but it's not actually Cigna Insurance, which also seems really sketchy to me. But, if you don't have those names on your card, you should check. You should get with someone like us that can go through it and be like, this isn't real or this is real and this is what, because you're not going to know until something goes horribly wrong.
Wow. Dang. Yeah, you're right about that. Okay. Thank you so much for some of those follow-up pieces. So watch out for scams and also watch out for things that are maybe not true health insurance. Yeah. And if you've got a question, reach out to someone like Rebecca, who is a true blue pro in this stuff, and figure this stuff out. Make sure that you're on the right track.
Yeah.
All right. So I'd like to ask, what is one of your favorite songs or favorite quotes or both?
Well, my favorite song is It's a Great Day to Be Alive by Travis Tritt, because every time I put it on, it just makes me happy.
I've never heard it, but I love the name of that song, so that's great.
It's kind of just like a silly song from the 90s, and I don't know why, but it just really connects with me, and every time I hear it, I just get really happy. And I'm currently obsessed with a new band called Kaleo, and they are Icelandic. And if you have not listened to Kaleo, you should check it out. They have a song called Automobile, which is one of my absolute favorites. Also, just a light, very fun. The whole song is about driving in his new car and how awesome it is.
I love it.
And it just makes me feel, it's like when you're out in the sunshine and your sunroof's open and you're just really enjoying it. And that's what that song feels like to me. So yeah, but Kaleo is a newly discovered thing for me, and I am obsessed.
Well, and it really is about the simple things in life. When we overcomplicate things, things get overcomplicated, and then you start missing the boat on the flowers and the sunshine and the blue skies and the friendships and the things that are the most important, in my opinion.
Well, like in the Travis Tritt song, he's like, yeah, I've got a beard, I'm planning to shave it. And he's like, I'm going to make soup. Like, it's just the most normal kind of day song, but he's just really happy about everything that happens in it.
Well, that's the best, because you can have those days every single day, as opposed to trying to, hanging your hat on some big, giant, cool thing that happens. But those things only happen once, every once in a while, whereas all those other things can happen all the time.
Well, and that's one of the reasons why I love it. It's not about love, or it's not, like all the things that people write about. It was just like those moments where you're driving and you look over and you're like, oh my gosh, the sun is so, like your picture right here, right? Yeah. I have a long commute on purpose because I really love that time to mentally shift from work to home. And I love just driving along and being surprised by how beautiful nature is. And those moments are really what make you joyful throughout the day.
I love it. That's awesome. So, Rebecca, I sincerely appreciate coming onto the show. This has been a lot of fun, and I'm glad we were able to actually do it 1.5 times.
You all, those of you that weren't here the first time, you missed all of our jokes about a poltergeist named Frank who follows me around and breaks all the tech. He's naughty. He's a very naughty poltergeist.
Yes, without a doubt. And he jacked up all the internet in Holiday and Cottonwood Heights last time. So
gosh, he is so powerful.
Awesome. Well, I'm going to have you hang tight in the green room for just a few moments while I wrap up the show, if that's all right.
Yeah, sounds good.
Cool. Thanks, my friend. I appreciate being on the show.
Thanks, Jason.
So there you have it, my friends. Rebecca Yates, CEO at Ark Insurance here in Salt Lake City. If you have any questions regarding health insurance, be sure to reach out to her. As you see, that she's been in the industry for a long time, and she knows how to cross all the T's and dot all the I's and to look out for you. And she is also one that will not undo good work. So if you're in a good position, she'll let you know that you're in that good position. So thanks again for tuning in to Always the Journey TV. I sincerely appreciate your time watching these interviews and learning about all these wonderful people out here in the community. Please feel free to throw us a thumbs up on the video if you enjoyed the content. And I would sincerely appreciate it if you subscribe to the channel so you can get updates on when some of these interviews will pop up. Thanks again for your time, and have a magnificent day. Take care.